Well, just about 40 minutes left of trading on this Friday. Benchmark stock indexes right now are still lower across the board. The Dow is down 24 points, the S&P lower by 2, and the NASDAQ Composite Index down 2 points as well. Let's check on the most actively traded stocks over on the big board. You have shares of ExxonMobil down 71 cents. Texas Instruments among some of the semiconductors that are weaker. We're going to talk about those semiconductors in just a moment. And also Chevron shares are down. Over to the NASDAQ, Google shares down $5 and Apple Computer shares down more than $1. Well, telecom is usually one of the last areas to prosper when the bull market is aging. With the sell-off that's been going on across the board, are telecom stocks becoming a safe haven and a sweet spot for investors? Todd Lowenstein helps manage about $20 billion for HighMark Capital, including the HighMark Value Momentum Fund. He's got some tech names, or telecom names, I should say, in his portfolio. Todd, talk to me about this. Is this group becoming a safe haven now, you think?
Yes, it appears that way. Investors flocked back to telecom services after underperforming in 2005. Investors were very skeptical about some of the massive capital spending programs that these companies had embarked on in 2005. And with the accelerated line losses occurring in their core businesses, stocks got sent down to levels we found very attractive. We thought they were trough valuations, and we saw upside in terms of optionality to the successful rollout of their fiber strategies, as well as synergy savings from the recent M&A activity in the group. So we found the bias and the risk reward to the upside late last year.
Let me talk to you about the S&P Integrated Telecom Index, because when you look at it and you talk about sort of buying last year, we did peak just a couple of months ago, as we did see the peak around March in this group, and we've sort of been consolidating ever since then. What do you think is happening now?
Well, there was a reversal of the trend we saw in 2005, you're right, and it peaked in March. I think overall people have gotten skittish about the market in general, and there's been indiscriminate selling across the board. And because they had outperformed so much, there was probably some profit taking there. But year to date, they're still up about 8% relative to the market. I think the best performing sector year to date.
Todd, let me ask you about the telecom equipment stocks. Bigger winners this year, but you're a little cautious on those.
We don't find those quite as attractive as the telecom services companies, although we are nibbling in the area a little bit. They have come down to valuation levels where the risk reward does appear favorable. We like the telecom services industry a little better because we felt there's such excessive pessimism baked in to those stocks, and really embedding draconian assumptions in terms of their ability to generate free cash flow and redeploy that back to shareholders in the form of dividends and share buybacks. So we found very limited downside risk and optionality upside there. Telecom services, equipment makers, frankly, they're in the process of consolidating their industry on the heels of the consolidation we saw in the services industry. And so we're a little skittish there.
Let me ask you about it. Verizon, one of the largest telecom holdings for you in the portfolio. How is that faring? I mean, especially against competition, not only in the wireless business, but this voice over IP, big competition from the cable companies on this front.
Yes, the traditional ILECs, the baby bells, their business models are under assault right now, both from emerging technologies, new entrants in the form of cable operators rolling out triple play offerings, a bundled offering of video, voice, and broadband. Verizon especially has been hit hard in the Northeast. Cablevision is offering a $99 bundle, which is a very compelling value proposition to customers. And the bells find themselves on the defensive, having to consolidate their industry and then roll out massive fiber build to attempt to offer next generation services competitive with the cable companies.
Todd, we have to leave it there. Thank you. Todd Lowenstein, manager of the HighMark Value Momentum Fund, looking at the telecom stocks. Well, still ahead, Citigroup cuts its profit estimate for Texas Instruments, but some chip stocks are shrugging off the news. We'll take a closer look as Bloomberg Market Movers continues.